I wonder what you made of the presser this week, and does he need to tidy anything up going into the House and Senate next week?
Well, he might tidy up the outlook. I think he was misread as being gloomy and doomy. I actually looked at the SAP, at the projections. I wouldn't call them very optimistic. Who's optimistic in this day and age? But they struck me as slightly on the optimistic side. If you did the arithmetic over the 2 years, 2020 and 2021, the Fed is projecting GDP to be down 2%. To me, that seems more optimistic than pessimistic, given what's going on.
So what does that mean for policy, do you think, going forward? And do you think that's being misread by the market?
No, I don't think so. I think the view in the markets is the Fed will do everything in its power to try to mitigate the damage, and then when the time comes to give the economy a little bit of a boost out of the recession, depression, whatever you want to call it. We don't have a name for anything like this. Lows. So I don't think the market's misreading that. What I do think, and maybe that was part of yesterday's market reaction, who knows, is people in the markets tend to think of the Fed as a Superman, that it can do anything. It can't. It has lots of power, and it's using that power. But it's not Superman. It can't do everything. It can't, for example, put money into the hands of people that need it, as Jay Powell keeps saying over and over again.
I mean, Alan, it's Sarah. One of the debates today is whether the Fed, encouraged the buy the dip crowd. Whether Powell made it clear that high asset prices aren't going to stand in the way. QE is going to be very plentiful. Interest rates are going to be rock bottom for years. So, I mean, that forces people to buy risk assets, and growth in particular is free.
Look,
is that right?
Well, I mean, it's half right. It's sort of tautologically right. If the Fed says we're going to do stuff to try to improve the financial situation, that's probably going to be good for financial assets. And as to your point, it encourages a bit more risk bearing than, the day before or whatever the Fed said that. But, Powell didn't say anything at his presser that he hasn't said before. He wasn't doing a victory lap or promising vast new programs that the Fed might or might not be able to deliver. It looked to me more of a case of the markets incorrectly viewing that there's a Fed put under every asset, which is not right.
There's also this budding debate, Alan, over inflation versus deflation. Is demand so weak that we're going to be in a deflationary period for years, or are we starting to see some green shoots here of inflation? And what is that actually going to mean for a potentially slow recovery? Where do you come down on this?
I would come down over the term that you're talking about, the next couple of years, firmly on the deflation side. I'll be shocked if the Fed is able to get the inflation rate up to its 2% target within a few years. Look, it's been trying to do that for years and years in a strong economy, unable to push it almost got to 2%, or maybe it hit 2% for a month or something, but basically has been undershooting inflation in a strong economy. We now have for some time a weak economy, and that pulls down the inflation rate, not pushes it up. If you look way, way ahead, 5 years from now, 10 years from now, well, who knows? There is a huge amount of reserve creation, a blow up of the Fed's balance sheet. And at some point, there may be a challenge for the central bank to pull back on those things to prevent inflation. But that's in the deep, deep future. And you can see it in bond prices. The people that trade the 10-year Treasury are not worried about inflation.